also imposed a 25% tariff on foreign aluminum, copper, lumber, and steel because if we don't have, as an example, steel and lots of other things, we don't have a military and frankly we just won't have a country very long.
For the past few months, the US dollar has been on a roller coaster ride. Initially, it surged as markets anticipated that President Trump's policies would bolster the American economy and prompt more interest rate hikes from the Federal Reserve. However, after a gradual decline throughout February, the dollar has recently taken a sharp downturn, falling to its lowest point this year. In this video, we'll explore the reasons behind this sudden slump and discuss its implications for both the United States and the global economy. If you're new here, make sure to subscribe and hit the bell icon to stay updated with the latest economic trends. Now, let's dive in. The dollar's initial surge. To understand the recent movements of the dollar, it's essential to look back at its performance over the past several months. As it became apparent that Trump might win the election back in late 2024, and especially after his victory, the dollar surged against other currencies. The US dollar index, which measures the strength of the dollar against a weighted basket of currencies, is the best way to track its movement. This index provides a more comprehensive view than comparing the dollar to a single currency, as it accounts for the dollar's value relative to multiple currencies. According to the US dollar index, the dollar rose steadily from late September, peaking in early January at a nearly 3-year high. If we exclude the brief surge at the beginning of the pandemic, when investors flocked to the dollar as a safe haven asset, the January peak was the strongest the dollar had been since 2002. Several factors contributed to this initial surge: anticipated inflation and interest rate hikes. Investors expected that Trump's policies, including tax cuts and tariffs, would lead to higher inflation. This, in turn, would prompt the Federal Reserve to raise interest rates, making dollar-denominated assets more attractive. Perceived resilience of the U.S. economy. There was a widespread belief that Trump's trade policies would harm other economies more than the U.S., making the dollar relatively stronger. Optimism. About economic growth. The business community was optimistic that Trump's agenda of tax cuts and deregulation, coupled with advancements in artificial intelligence, AI, would boost economic growth. Dollar's sudden decline. However, in the past few weeks, the dollar's trajectory has reversed sharply. After a gradual decline in February, this downturn has accelerated recently, leading to what some might call a crash. As of Thursday morning, the dollar is now at its lowest point since the election in November. While the dollar remains relatively strong by historical standards, the speed of this decline is noteworthy. It is the sharpest since at least the pandemic. Moreover, this decline is occurring despite Trump's implementation of significant tariffs on countries like China, Mexico, and Canada, which, in theory, should have bolstered the dollar. Factors behind the decline. Several factors appear to be contributing to this sudden decline. Economic policy. Uncertainty. The uncertainty induced by Trump's constant policy changes, especially regarding tariffs, has dampened consumer and business confidence. The Federal Reserve's Trade Policy Uncertainty Index, which measures such uncertainty, currently stands 12 standard deviations above its historical norm. Overall economic policy uncertainty is at its highest level ever recorded outside of the pandemic. Fears of a looming recession. Rather than boosting growth, Trump's policies seem to be pushing the U.S. toward a recession. This has made the U.S. less attractive to investors and has reduced the likelihood of further interest rate hikes by the Federal Reserve. Global economic optimism. At the same time, there is renewed optimism about other major economies, particularly Europe and China, both of which have recently committed to significant spending and stimulus programs. For example, Germany has announced plans to scrap its debt brake to invest heavily in infrastructure and defense. Similarly, China has introduced a new stimulus package to sustain its economy in the face of escalating U.S. tariffs. Implications of a weaker dollar. While a weakening dollar is symptomatic of underlying economic challenges, it could have some positive consequences from certain perspectives. Boost to U.S. exports. A weaker dollar makes American exports more competitive, which could help reduce the country's trade deficit. Relief for developing countries. For the global economy, a weaker dollar could be a relief, especially for developing countries. Commodities priced in dollars, such as oil, would become less expensive. Additionally, servicing dollar-denominated debts would be cheaper, easing debt burdens in the developing world. Conclusion. The recent decline of the U.S. dollar is a complex phenomenon influenced by domestic policy uncertainties, fears of a potential recession, and shifting global economic dynamics. While there are potential silver linings, such as increased competitiveness of U.S. exports and relief for developing economies, the overall picture suggests caution. Policymakers and investors alike will need to navigate these turbulent times carefully, keeping a close eye on both domestic and international developments. If you found this analysis insightful and want to stay informed about the latest economic trends, don't forget to subscribe to our channel and ring the bell to receive notifications about our latest videos. Your support helps us continue to provide in-depth analyses on topics that matter. Thank you for watching, and we'll see you in the next video.